come on.
Okay, I'm the last one here, and we're all getting ready to go on a break. And this is such an exciting topic that I'm sure you people will be just raptured when you hear what I have to say.
Yeah.
So should we jump up and down a couple times? Some of you are going to sleep, I can tell that. But we're all right?
We have money now?
Oh, money. We have a little bit of money. This is as of yesterday. I went and checked the Chase account, and you can see what we have there. So there is some money, you know, you don't want to arbitrarily say there's some money to spend, but there is, you know, for needed purposes. We have it there. And so the profit and loss statement from, you know, this reward is over and everybody out there. Right to the next page. I don't know if you get that all on one page or not.
I got it.
As you can see there, that is our, up a little bit. Total, yeah, there we go. You can see what happened between the last complete year I had is 2018. And you can see what happened in 2017 of $9,000 loss. That's because we had a physical location that we were paying, you know, $12,000 to. And Craig and I and the board decided, for a number of reasons, we didn't need a physical location anymore in Oakland. Things were getting kind of expensive, and they're even more expensive now. So we went virtual. Everything is virtual. Everything, what I've done, all the files are up in the cloud. If at some point in the future, someone wants to take over my position, I have a defined position? Question? To do what I do, anybody across the country can do it because, like I said, there's no file. The file cabinet's in the cloud. In this case, it's in OneDrive and SharePoint. So anyway, you can see there what the difference, once we lost the physical plant, we came out with a profit for 2018. And going forward, we should have that continue. So you can see this is a standard profit and loss statement. On the top are all the income, then cost of goods sold, and then all the expenses down below. And that's what I do for LifeRing. That's part of what I do. I handle the calls, emails, and the financial stuff. There's putting money in the bank and paying for bills. So I don't know. Donations are self-explanatory. The vast majority of those donations are individual donations, and they happen because of Jenny and the drive. We have a drive twice a year, and we're going to change that up because Jenny has some new ideas about how to do it. But anyway, right now it's semi-annual. We do it in June and at the end of the year.
What's included in miscellaneous income?
Miscellaneous is miscellaneous income, like Amazon Smile. No. We'll get 70 to 100.
That's okay. So
Okay.
that's book royalties. Sorry.
4,300 is just like Amazon Smile. I would have to open it up and see, but it's just stuff that doesn't fit in any of the other income categories. You can see our Amazon book royalties jumped up significantly between the years because we went completely to Amazon for our book publishing, and we lost physical inventory that we had to have. In 2017, we had the physical building and we had physical stock. That all disappeared, and we went to book on demand, books on demand, and can significantly decrease our inventory costs. The other ones are kind of self-evident, I guess, in the income thing. Cost of books went down because, again, we were not doing the physical inventory, but doing stuff off of Amazon. And then the expenses. Payroll expenses has remained like that for the last 6 years. But anyway, the other expenses, outreach is what Craig does mainly in terms of sending out free literature and free books to professionals, to conveners that have a financial issue. You know, we will try to offer them very liberal terms in terms of payback. The standard collection of books we send is a starter kit, $50. Across the country, a lot of people can't quite pay that, and then we'll write it off. And we know that kind of going in, that we're going to write it off. And that is just it's a advertising mechanism to get our name out there. Sometimes it works, sometimes it doesn't. But that's what all that is. Shipping costs and the actual book cost is represented in that. LifeRing press expense is everything associated with publishing. So we've got the income up there under Amazon royalty, books and LifeRing press sales. You got to add those both together because they're both book sales. This one from Amazon, the other one from the LifeRing bookstore. And then you deduct the expenses, and you see that we're making some money on the book sales. So that's where we're at. It's not bad. Some people will say, why do you have $30,000 in the bank? You should be spending it for promotion or getting additional literature out there, or doing something with it. You know, it doesn't do you much good in the bank. But if for some reason our income drops, people stop buying books, or donations really drop, then we at least we have some operating capital to keep going forward.
So I did a pretty in-depth research on what reserves should be for a nonprofit. Did we just, because that would be, I guess it's, if you look at the expenses, it's not even, it's like 6 months of full expenses, right? But you can't just go by that. You go by the very bottom number as well, or like what maybe last year at -10, right? Because that would come out like, so if you had bad years like 2017.
Yeah, you'll lose every once in a while, though it's gotten our expenses. It's called controlling expenses and upping the income. But I'm not a professional nonprofit person. I'm an amateur when it comes to all this, and I learn as I go. And maybe, hopefully, new people that come on the board, especially, are aware of some of these pitfalls and can adjust and make me and the board aware of where we need to go with things.
Has the board decided that 35,000 is proper reserves?
No, I pretty much decide. I like to keep a lot of money in the bank, just in case.
I would say that the board reviews the financials.
Yes, every month they look at it.
Some of us even more carefully, more deeply than others, as Robert was always asking questions and then maybe giving the detailed lists and things. But so in that sense, the board is well aware of what the savings is. But we also we have talked about getting together a finance committee to do an overall analysis of where we are and whether we should be making any changes, and maybe that'll be a project for this year.
And we do have a CPA, Certified Public Accountant, that does the filings with the Internal Revenue Service and the state of California. So, and that's done every year. She was moving back to California this year, so she asked me if she could get an extension on the taxes for this year. And once she settled down, she'll, because I would have put that up there, but I didn't have it for 2018.
One other thing, perhaps to answer your question, Steve, is Robert might be getting to this in the next slide or whatever, is that this is the first year that LifeRing's had a budget. So we created a budget based on last year's information. So I think the question you're asking would be easier to answer now that there's actually a budget comparing what we might spend to what we historically.
Yes, we do have.
Just one observation is that it can become contentious, That's what I've found, like having reserves. Everybody seems to have an opinion on what that is. That's why I was asking.
I think standard is 3 to 6 months at the low end, but then you can go beyond that.
There's dozens of ways to look at it, right? Like 3 to 6 months of what? Assuming no income? Assuming half income? Assuming all income? Right? It's really, I've done there's like a Grant Thornton article on this, you know, but then people will bring up, oh, but that's for like Red Cross and, you know, some of these big organizations. When you get to a smaller organization like ours, it becomes more art than science, I think. So it becomes kind of a discussion. And it's just good to, I mean, I get, and I've been to the board meetings. I mean, I understand that the board looks out at expenses, but certainly the board kind of acknowledging, okay, yeah, we want this amount of reserves. That's what we're going to do for the next 6 to 12 months, or, you know, head on that path is a good thing to have.
So should that be written into the bylaws?
Yeah, and flexibility. You don't write too much in the bylaws.
That's a situational thing. Bylaws usually aren't used to govern that type of.
I'm on another
Then
board.
we should establish a policy with direction.
I'm on the board of the Kona Cotton Farmers Association in Hawaii, and it's very similar. And I think one of the things that just occurred to my mind is that like the KCFA, LifeRing, my experience with LifeRing, smaller nonprofits like us are more event-driven than a large thing like Red Cross or something. Whose budget procedure and whose adherence to budgets is possibly more stringent than ours.
Yeah. But we should have a budget. I mean,
Yeah,
we should
we
have.
do.
It sounds like we do. And
Our
now we'll
problem
have
with
year
Hawaii
after
is
year.
we're not spending it because we're all
Well,
old and
that-
tired.
Trust me, that I've seen that at other, and sometimes that creates resentment, though. Sometimes that's
Exactly.
that it's like, well, you have the money, why aren't we spending it? You know.
Younger, more spendthrift type folks on our board.
So that's what the board is for. What should we spend the money for? And a clarification in terms of payroll, that's the largest expense. Originally, in 2012, when I was brought on, I took the expense on an hourly basis from Rachel, who was there before me, 14 something an hour, and times 20 hours a week. I only work part-time. There's not enough activity to justify a full-time position in this organization, and that's what it's kind of built on. Now, some weeks it's more than 20 hours, some weeks it's not 20 hours. But
So what are you getting now that you're general manager?
probably less. But salary now, it is less because that's not gone up for inflation. It's just been a static state, you know, the whole time. But I'm happy. Hey, I'm a part-time person and I'm having fun.
We appreciate your effort.
And this was a technical moment. Mind you, I've not put a book together before, and I made some mistakes, but nevertheless, it's here.
And I would say, even though we don't have a physical office, you're always the friendly guy in the office to me.
Yes, coffee shop.
It is.
I'll always go to a coffee shop.